Okay, and I'll get the let me get the chat set up so I can see that. Close the whole thing.
Uh, Alt H is the easiest way to pull it up.
Alt H.
You're having trouble finding it?
Let's see. Alt H. Yeah, just give me 1 second. Let's see. Up here we go. Chat. Okay. First of all, obviously, I want to thank everybody for being here today, and of course, thanks again to David Cosmeter. Dave and I go way back. I used to host Crowd Forecast News for a long time, and that was a lot of fun.
Yeah.
I
You know,
figured that.
two
Go
weeks
ahead.
in 2 weeks, it's going to be 10 years actually.
Oh
So I
wow,
started.
that's that's crazy.
Yeah,
Congratulations on that. Great show, and I really had a blast yesterday. I just enjoy when you get these guys together, and the thing is, and it sounds kind of weird. It's like I don't think the audience realizes how great some of these people are, and the amount of information that they're getting, and it's just I wish I had that information 20 something years ago when I was just getting started. I just want to spend a few minutes just talking a little bit about what I do. I figured the best way to do it would just be to throw up a few live charts. I'm slotted as a swing trader, but I will stay with positions as long as they move in my favor. If that's days, weeks, months, and occasionally, not that often, years, but that's where the real money is in a longer term trading. But you can only predict so far out. It's kind of akin to predicting the weather. But lately, there hadn't been a cloud in the sky, but if it gets cloudy and thundering, I know it's gonna rain soon, but I don't know if it's gonna be raining this time next week or the week after. So I have a lot of simple little patterns, and a few of those I'll show you today. One such pattern would be the first pullback in a hot IPO. And this is a good example. This IPO comes public and not a whole lot of fanfare back here, but it did begin to take off nicely and it did begin to accelerate higher. And we looked to play the first pullback and we got in right here. This was a recommendation on my trading service going back to, and you could get these, by the way, if you go to, and I'll just punch it up for you so you can see it, davelandry.com/archives. And you can see all my recommendations, warts and all. And this is a great free exercise, if I say so myself. I mean, I wish I had years ago somebody I could look at and say, okay, what did he do? What he didn't do? How did he do? Boy, this guy just screwed up, and now I feel normal because this guy's supposed to really know what he's doing, and his trade didn't work out. Well, every trade we get into, we don't know whether it's going to work out or not. I think Marcus, I caught the tail end of his presentation, which I thought was great. And I agree with him. You don't know if it's going to work out or not. You have your probabilities in mind. Anyway, you can see this stock took off nicely, accelerated higher, began to pull back, and we got in right around here, and we took profits right around here, partial profits. So we take off half our shares, and then we bring our stop up to break even when that happens, and then we trail the stop on the remainder higher. And the other thing, this is kind of the secret sauce, in addition to taking that partial profit, we have to stop at break even at that point on the remainder of the shares. So let's say we put on 1,000 shares, take off 500, and our stop is at break even. So the worst can happen to us, barring overnight gaps, would be a break even on the remainder of the trade. And this opens us up for potentially unlimited gains. Now, if you're newer to trading, you want to make sure you're trading for limited losses and unlimited gains. There's a lot of systems out there and a lot of people selling stuff where it's percent wise, it's very highly correct. However, you occasionally get whacked and you lose all your money. So there's a I can't, I don't know if we're PG-13 or not, but the eat like an elephant, eat like a bird and poo like an elephant. It's an old commodity adage where you make little tiny gains and all of a sudden you just have this huge loss. You want to do just the opposite. You want to try to keep your losses small and then ideally ride a trend for a long time. So this is the only long we have left over. Even though the market got a little iffy a while back, as you are aware, we stayed with this because we weren't stopped out. So in for a penny, in for a pound, we follow the trend throughout. Now, I see a couple of questions coming in. We're going to get to those in just 1 second. Just one more thing real quick, one or two more things, I should say. This is the S&P 500, and this is the zone chart that I have in here. And I used to just have this little line here at 10%. And one of my clients pointed out that the market often gets in trouble once it gets past 5%. So my thinking with this system, and I'll give you the rules here in 1 second. In fact, we can do that now, just real quick. And I don't know if you'll get to see them. Let's see if we can share the other one. Technology is great when it works, huh? So the rules are, let's get the rules up. I wanted to create a system that would be super simple and get you out of the way when the market got into trouble. And this system, knock on wood, so far would have gotten you out of every bear market in history. And I forget how long ago I developed this. It's probably about 5 or 6 years at least ago, maybe 7. But anyway, you want to get out when the market is 10% or more away from its 50-week closing high, and you close below the 50-week simple moving average. So right now in the S&P 500, 49.32, and once we get below 5,000 round numbers, the market could be in trouble. My thinking here is, if a market is going to lose 50% of its value, and this is just trend following one-on-one, it's going to lose 10% of its value first. And 10% in the market is a good round number to think about getting out and pulling in your horns a little bit. Now, even if we get this sell signal, I'm not going to get rid of that ULS position until and unless I get stopped out. Sometimes you get in a position and they can defy gravity. But anyway, simple little system here. And this kind of helps you see the forest for the trees. So longer term, the market still looks okay. We're just barely below this 5% line, which is 5%, by the way, of the 50-week closing high. And again, the sell would be down below 5,000 at 49.32 currently. And that'll come up a little bit over time. Now, let me get to my live charts. We'll show one more chart, and then we'll get to your questions. Now, shorter term, things aren't so great, and that's the big concern. And as I said yesterday in the show, it's shorter term, the market often does what would cause the most pain to the most amount of people, and it also does the obvious thing in an unobvious manner. So this is borrowing some logic from Linda Raschke, and she said these two statements before, and I asked her, and she said, well, she probably picked them up off the floor. But the obvious thing would be for this market to roll back over after this big thrust down. But what's it doing? It's going up first, and that's can be scary if it doesn't keep going up, obviously. Keep in mind, I'm a trend follower, so I'm not going to short the market until and unless it begins to roll back over a trigger position. Now, we did short recently, and I'll show you a position we shorted recently because it did trigger in. But you can see so far, because I know everybody wants to know what's going on with the S&P 500. So far, we're just pulling back to the 30 EMA. And this little indicator down here, I like to call my indicators illustrators, because they don't indicate anything. They just help to illustrate what's already in the chart. And in most of my analysis, I'd say 95 to 99% of my analysis, I'm just looking at a blank chart with no indicators whatsoever. There are some times where I do add in the occasional moving average, and I'll show you one more pattern there, and we'll get to your stock picks here in 1 second. But anyway, you can see that so far we're pulling back to this moving average. This is a 30 EMA, and getting back to this illustrator down here, or indicator, however you want to look at it. This just counts the number of bars that the market lows are above the 30 EMA. I call this Landry light, as you can see down here, Landry light. And when the market goes below the 30 EMA, and you can put any EMA you want in the TFM 10% system, if you take a look at those rules in the recording, you'll see that it requires 2 bars of upside, the Landry light, with the 50 simple moving average, and that's a 50-week moving average. So in this case, the 30 EMA. And by the way, I'll show you some crypto here in a second after we get through your stock picks. And that's a great market to show you how great this simple little moving average is. Well, it's exponential moving average, but how something as simple as a 30 EMA can keep you out of a lot of trouble. I trademarked the phrase trading simplified because I truly believe in that. But you can see we were doing really well in here. We had a little pullback to the moving average. That's okay. And you can see the Landry light went away, and then the market continued higher. And that's actually a pattern in and of itself. Linda Raschke once said, there was Linda again. You get so much good stuff out of her. I'm a big fan of Linda, and I work with her on one of her books, helping her edit it and all. So I'm good friends with her. But she is a big fan of the trend and all. And when you pull back to the moving average like this is a good place to get in. Oh, I know what I was I'm sorry, I lost my train of thought for a second. She says all you need is one pattern to get successful. So everybody's like, well, what's that one pattern? What's that one pattern? And that one pattern could be something like Landry light pullbacks, because it's very easy to recognize. You wait until the market pulls back to the moving average, and then you look to get long if and only if that trend continues. So anyway, that's S&P 500 pulling back to the moving average. One more chart here, and then we'll get to those questions, I promise. We take a look at the bow tie moving averages. And that's just a 10 simple, a 20 exponential, a 30 exponential. And one reason I do use these moving averages, they are useful, but another reason I like to use them is they help with teaching, because it's easy to show something that you could see on the charts without a whole lot of learning how to read the charts in and of themselves. And basically what we're looking here is for the moving averages to come together and then spread out to the downside. So we've got a 10 simple, 20 exponential, and a 30 exponential. And when they're in uptrend proper order, 10 is greater than 20, and 20 is greater than 30. And that's illustrated down here. Once again, this is just counting the number of bars. It's not the magnitude of anything. When it's yellow, the moving averages are bouncing back and forth with each other, interacting with each other. When it's red, it means that the 10 is below the 20 and the 20 is below the 30. And if you go back historically and look at charts, this could be extremely useful. And if you look at something like the weekly S&P 500, and you go back to every bear market in history, and you'll see that you do have these crossings that happen on a weekly chart. Now, sometimes it can be a little late. That's what moving averages have lag, I should say. But as a general statement, this will really help to keep you on the right side of the market. Go back to 2007. Here's a bear market here. When is this? 2007. Okay, notice that we flipped from uptrend proper order to downtrend proper order at the beginning of that bear market. As the bear market ended, these moving averages split back up. So that's just some simple little trend following techniques to pay attention to. Now with the bow tie pattern, let me just show you the semis real quick. And I promise I'm getting to the questions. Thank you. Keep them coming. Keep them coming. We'll have plenty of time to get to everything, believe me. But if you take a look at the semiconductors lately, okay, they have bow tie to the downside. Let's get back to a daily on this one. So they bow tie to the downside, meaning again that the moving averages have flipped over from uptrend proper order to downtrend proper order. Okay. And that's illustrated again down here. We had a little bit of yellow in between. The faster this goes from green to red, the more abrupt the trend change is. We'll take a look at the NASDAQ in a few minutes if we get a chance. But once you get to crossing, you're only looking for a 1 bar pullback. That's all you need. So the trigger on that would have been right here. Immediately you see the market bounced, but then we had a really, really nice sell-off from that. So far on the daily chart, we're in downtrend proper order. So far, the S&P is just pulling back for now, at least. And I hope it goes straight back up. And you got to be careful in the markets if you hope, but that's what I would ideally like. I just call them like I see them. Shorter term, I think this market's in a lot of trouble. Longer term, it still looks okay. Once we drop about 10% or more from that 50-week closing high, I'm going to really begin to pay attention and maybe pull back on some of these longer term holdings. And by the way, I don't have a lot of longer term holdings. I have some leftover money for my kids in their college funds, and I'm not actively trading that. And I have a long Q position, only 100 shares of the Qs that I bought based on the system, just to follow the system mechanically and show everyone. In my own trading, I'm much more discretionary on where to get in, where to get out, but it is a very simple system that I follow. Okay, SOX L target, please. Okay, SOX L is probably not going to be looking fantastic. I usually don't hold these leverage ETFs overnight or longer because of the leverage, and especially on the short side. It's a little complicated to get into, but on the short side, longer term, let's take a look at like SQQQ, for instance. Longer term, they all go to zero. And that's because they have to keep shorting at lower and lower levels. And it's kind of like a reverse martingale type of thing. And also, there's the leverage, and they're also just tracking day over day change, like a 1 day change is what they're trying to track. They're not trying to say, okay, semiconductors up 100% for the year. Let's make sure our leverage fund is up 100% for the year. They're just trying to track the 1 day change. And that math doesn't add up longer term. But you can see on the short side, especially leveraged and short, the QQQ, the SQQQ was 89,000. I think if you go way back in time, it was 500,000 at one point in time. Yeah, so it was almost 500,000 or 400 something thousand, and now it's down at $9 or whatever. So eventually these all go to zero. There's a I guess negative expectancy, for lack of the better word. If you were brave, you could just short these things and hold on forever, and they would eventually go to zero. So I would not hold longer term, but instead of talking about the SOX, we can take a look at SOXL, but then we'll take a look at the SMH again real quick. So SOXL, you can see so far it's just pulling back in here, and it has bow tie to the downside, and the entry would have been right there on the bow tie. You see you had a higher high and higher low. Entry would have been here. You had a little bit of pop higher, and then the market imploded, and now it's just setting up again as a generic pullback. So I think the semiconductors are in trouble. Let's take a look at SMH. Now, when I get into a trade, I figure out where my stop needs to be, and I make my initial profit target, or I factor that off of where the stop needs to be. So let's say a stop is 10 points away in the market. I add those 10 points to the entry, and that becomes my initial profit target. Your stop, you want to be outside of the normal noise of the market. So if a stock is bouncing around 4 and 5 points a day, if you're in there with a 1 or 2 point stop, you're almost guaranteed to get stopped out on noise alone. And the other thing is, where would you be wrong? So in the case of the SMH, it hasn't triggered on this last little pullback yet. So far, it's just pulling back. So if I had to make a target on this, I would say at least the old lows, and that would be my first target. And after I get my initial profit target out of a trade, like the US trade I just showed a few minutes ago, I then again move the stop to break even, and I hope to make 100%, 200%, 1,000%, 1,000,000%, whatever. Obviously, it won't. It usually doesn't go up that much, but I want to hang on as long as I can. I think Bill Dunn, and there was some before him, 100 years before him, said something very similar. But trend following is like riding a bucking bronco. It's very hard to hang on. Also, longer term trend following, that is, your accuracy is going to be abysmal and your drawdowns are going to be abysmal. And it's a very, very tough way to trade. Now, when the markets are blowing and going, it's fantastic. But anytime else, both of those things are going to really work against you until you finally catch that elusive trend. And that's why people like the turtles did so well. They were in the right place at the right time. And even the turtles soon realized that they were over leveraging, and they were getting in a lot of trouble quickly, and they quickly scaled back on their trading while they were still in the turtles program. Anyway, so longer term trend following is where the money is, but it's also where the risk is. So I'll take a shorter term to longer term approach. So something like the SMH, I would short it if it takes out, maybe let's say this low here, give it a little wiggle room just in case it fakes out. So if let's say if it takes out 219, and then my first target would be around 200, and then you probably want to stop out somewhere up here 250 or so, just in case it triggers and keeps going up. So I don't have a target in particular for SOXL. We'll take a look at that. I mean, if anything, I'm bearish on SOXL. So SOXL, I think at the least could come down and challenge its old lows. So the bow tie would have triggered here. Okay, bow tie moving averages going from green to red, uptrend proper order to downtrend proper order fairly quickly, given the appearance of a bow tie. And then you're looking to play the first pullback. It could just be a 1-bar pullback. So right here, you had a 2-bar pullback. The entry would have been here. And then obviously you'd want to take some profits along the way. Now, you wouldn't be shorting the SOXL. I don't know if you can short it or not. So you'd probably want to use something like the SMH if you were position trading. Okay. All right. ZS and NKE. Let's get more of a blank chart. We'll just do a 30 EMA on that. ZS is Zeke or something? No, Zscaler. Okay. Now, when I'm looking to short a market, let me just show you APH real quick. So we recently shorted APH. We got stopped out. Full disclosure, I do still have some puts on this one, okay, that have evaporated in price, but I took a tremendous amount of money off the table in those put positions, and I rolled them down. And if you have time, if you go to my YouTube channel, YouTube/Dave Landry, you can watch last week's Dave Landry's The Weekend Charts, and you can see those option plays. But in this particular case, we shorted this market right as it's rolling over. So you had up here, you had bit of a triple top. I don't trade directly off of the bigger picture technical analysis, but I do like to use it as a bit of a backdrop. And this first little pullback here, and this was also a bow tie, if memory serves. So in that first little pullback, we're looking to get short. We initially got creamed, but our stop was outside of the normal noise. Doesn't mean that everything always works. Believe me, it doesn't. But you can see that it bow tied to the downside. And this was a very tight bow tie. Notice there's no yellow in here. Notice it wasn't meandering back and forth like it did back here. Okay. So this is your trend signal. And now you got to figure out where you're going to get in. 1-2 bar pullback. We shorted it right around here. We immediately got clobbered. Seems like this old Wall Street adage. One of the few Wall Street adages, I should say, that seems to come true is all shorts go against you. And it did go against us. Now, what I also did was in this opening gap reversal, I did place some additional shorts, a little bit more advanced than I want to get into today. But if you go in and watch that video, you see it. So this is kind of my thinking process on that. So let's take a look at the ZS. So ZS, oh, the other thing I wanted to mention too, let me just show you, go back to the page 1 second. And I promise I'll speed it up. But if I'm going to short a market, okay, I would much rather short a market. Take a look at this APH. This is all-time highs. Anyone who has ever bought this stock and still holding it is very happy. They're doing really, really well. Now, remember, everything I do with technical analysis is just reading the psychology of the market. Trading is, especially with technical analysis, is reading the psychology of the market while at the same time embracing your own, okay? And that's the trading psychology. And trading is really, really tough. It really goes against human nature, and you have to resist those normal impulses when it comes to trading. And as I caught the tail end of Marcus's presentation, you have to have a plan so you're not so stressed out and emotional in your trading. But anyway, the point I'm trying to make here is that you want, if you're going to short a market, at least right now, as the overall market is just sort of rolling over in here, you want to be shorting stocks that are still at high levels. That's where you're going to get the most bang for your buck. So when we took this position, I was thinking, okay, anybody who bought this stock above this level here is now underwater. And they may be inclined, especially if they just bought recently, they may be inclined to duck their shares thinking that they made a mistake. So again, reading the psychology of the market at the same time trying to deal with your own psychology. And that is the secret of trading. There's no big secrets other than there is no secret. And you have to read the psychology of others while at the same time embracing your own. You can't control your emotions, by the way. That's something I got into about 12 or 13 years ago. I started studying neurology, and neurology specifically as it relates to trading. And the first thing I learned was that with every decision you make, my decision to do this webinar came with emotions. And without emotions, you can't make decisions. I'm like, oh, geez, this could be kind of close to the open. I really want to kind of keep a loose eye on the market. I want to see what's going on. It's kind of early in the morning. I don't know if I'm ready to do a webinar. So I had to think about all these things when I made a decision to do this. And of course, I said yes. So even what you could have for lunch today is a big decision. Whether or not I ate before the webinar, that's a decision that has emotions attached. So getting back to the ZS, if I were to, this stock is at fairly low levels, and you can see it's just kind of bouncing off this double bottom. I would not buy or sell this stock. If anything, it looks like it's still in trouble, even though it's bottoming out a little bit. But for me to get excited once the market begins to crack, I like a stock to come down and make major lows and then come off of those lows. So as the market is just beginning to roll over, I want to be shorting stocks that are high levels. Once the market's in a downtrend for a while, ideally, I want to be buying stocks that are lower levels. Now, when the market's in a longer term trend, I'm buying stocks that are in longer term trends because that's the only thing that's left. But I would leave this stock alone for now. I don't see anything here to excite me. You can see it did break down from high levels, trended nicely lower, and now it's just kind of bouncing around. NKE. Okay, well, Nike imploded recently. Let me check another chart to make sure it wasn't a split or anything. Okay, doesn't look like that's a split. Okay, I would avoid this stock like the plague because you've got this vacuum in the market. Anybody who was holding it at 95, okay, or higher, obviously, is going to look to get out. And as the stock begins to rally, people are going to look to get out of the way. I like to draw a big blue arrow on the charts, and right now this stock is headed lower. Shorter term, it's bottoming out a little bit, but that in and of itself, I would not take that trade. There's nothing there for me. ANIP. Okay, so here's a stock that's sort of all over the place. Put a gun to my head, I would say this could be a possible short. You can see it's just chopped around, beginning to break down. It's pulled back a little bit. So if anything, short this. But then you've got a lot of trading back here and back here. So it's got a lot of supply. I'm sorry, demand. What am I looking for? Support is the word I'm trying to look for. A lot of support below the market. So I wouldn't short this. Again, I'd find something that's maybe a little bit cleaner in the rollover, and even the SMH in and of itself, an ETF, usually you don't get to as clean of setups in an ETF, but notice like this ETF, you've got a nice little rollover, a little double top. It does tend to trade cleanly as a general statement. It tends to go up day after day after day. And on the downside, just the opposite. It tends to go down day after day. So that one's a little bit too all over the place. Rum, buy or sell. Let's see. Oops, I'm wrong one. RUM. Okay, neither. Okay. So this is going sideways. Now, one of the most valuable things you could do, and I'm going to illustrate it with a different chart, and it's probably I don't do a lot of indicators once again, but if we take a look at, let me just hop over to a different platform just for a second and punch in that RUM. So years ago, I experimented with everything. Okay, I went on the Holy Grail hunt like everybody does, and I tried everything. One thing I tried at one point in time was linear regression. And linear regression is just looking at basically the math would be the same if you looked at a chart, you drew a line through as many bars as possible. So I have a bunch of different ones plotted here, and this isn't as clean as I wanted to show it, but you can see that if we were to draw a line from where we are now and going back in time, this stock has made absolutely no progress. It's at $6 now? It was at $6 way back in January. So as a trend follower, and some people call me a trend following moron, there's nothing for me there in that stock. So I would leave that one alone. Lilly. Now, the drugs have been doing fairly well as of late. Let's take a look at PPH. So there's only a few areas that are doing extremely well as of late. Let's take a look at the major megs. And one thing that's a bit of a bummer is we had all these areas that were really doing fantastic, like the semiconductors, right? Just back to the SMH one more time. And then what happened? They began to implode. Well, the good news was there was this massive sector rotation, and take a look at like the banks, for instance, and we'll take a look at financials in general too. So financials in general, let's see if I can find them. Okay. Oh, here, okay. Well, let's get the banks first. Okay, there's the banks. Okay. So the banks, as you can see, recently took off. So it's like, okay, we're going to start buying banks on a pullback. Well, what happened? It pulled back, and all of a sudden it gave back all of its breakout. So that's obviously a bit of a bummer. So financials, as I was trying to get to earlier, same sort of action there too. Had a really nice breakout and then came all the way back. So there's only a few areas that are still kind of hanging in there. So major drugs would be one of them. PPH, you can see, and we're right here at all-time highs in the PPH. Now let's get back to the Lilly. Now Lilly, there's nothing for me here. Okay, so Lilly rolled over and now it's kind of going back up. So now it has this V-shaped look to it. So there's no pattern that I would trade that would get me too excited about Lilly at this point in time. So mostly I trade pullbacks, and like I said earlier, like a pullback to the 30 EMA would be a good place to get in. This stock just went straight down. Now it's going straight back up. It's got a big gap in here. So I don't see anything here to get me too excited. Lilly would have to make new highs and then pull back for me to go after it. Okay, you have 320. Okay, the bow tie moving averages are 10 simple, 20 exponential, and 30 exponential. And in Stock Charts ACP, I have bow ties proper order. It's a free plugin. You could simply add the plugin in if you have that platform. And if you have, I believe it's also in Metastock. Metastock has the bow tie proper order. Okay. And then also in Metastock and also in Stock Charts is the Landry light indicator, which is simply, again, the lows greater than the moving average or the highs less than the moving average. Okay, so he wants to take a look at Lilly with the moving averages. So let's take a look at that. Now, notice that you had the bow tie to the downside in Lilly, and before the bow tie, you had a first thrust lower. So you could see that you had this first thrust from here that the market begins to tank, okay? And then it begins to pull back a little bit. So this little pullback, that would have been your first short here. And then obviously you'd want to take some profits along the way, and then this gap would have probably stopped you out on the remainder. And so there's a trade that could have gone horribly wrong that you might have actually been able to make a little bit of money on with money management. But yeah, you had the bow tie to the downside. It's trying to bow tie back up. Again, as I think I said a minute ago, I'm not going to get too excited about a bow tie unless it's coming off a major lows, like a major bottom, or a major top like we saw recently. So right now, you really need to pay attention to the bow ties because a lot of these areas are rolling over. The question is, what's the difference between the Landry bow tie and MACD? MACD, I don't know a lot about. I'm sure I played with it at one point in time. I think it's moving average convergence divergence. The bow ties has nothing to do with convergence or divergence. Okay, it's just this indicator down here, the proper order, Landry proper order, just simply looks at the order of the moving averages. So if the 10 is greater than a 20 and the 20 is greater than 30, that is a +1. So as long as that's happening day after day after day, it keeps adding up. So you can take a look at let's take a look at the Qs because they had a pretty good run with the Landry light or the bow tie. So the bow ties, you can see we bow tied back to the upside back here. Okay, so it looks like we were kind of rolling over, and it never really happened. That rollover never materialized, but that's okay. And then we went back to uptrend proper order. We were in uptrend proper order for a long time, and then you can see we flipped back over to the downside, and now we're pulling back. So that would be a short. So MACD is a measurement of distance, and I could be wrong, but I think that's how it works. I think it's a measurement of distance between the moving averages, which might have some use, okay? And it's just something that I've tried along with everything else that you could ever imagine. And I've boiled it all down to blank charts and the occasional moving average. And the reason you see a moving averages so much today is because one, it's relevant to what's happening. The bow ties at the downside, very important to pay attention. And two, it's easy for me to show trends with the moving averages in the Landry light in the bow tie moving or proper order. JetBlue, Ethereum, we'll get to that in just 1 second. JBLU, that's for Scotty. Okay, so this one's beginning to break down. If it were breaking down from high levels like way back here, I'd be more excited. It's already at relatively low levels. I often joke I'm gonna one day I'm gonna do a trading system, and basically you just wait for airlines to rally and then short them. It's a horrible business. But for me, there's nothing to get excited about here. It's just breaking down from this little consolidation. It does look like it's going to go back to its old lows. It's too low of a price to short a stock. I think it's hard to short stocks less than $5 a share as a general rule. So I would leave that one alone. ESOA. And that is for, who is that for? Is that for Bonnie? Oops. Okay. So here's a stock that's going pretty much sideways for a long time. Looks like it's a pink sheet stock. Let me check the volume on another program. Okay, so the average volume is only 100,000 shares on this boy. bad boy, whatever you want to call it. I would leave it alone. It's going mostly sideways. Today was very impressive, but follow through would be key. For me to get excited about this stock, it would have to make new highs and then pull back. Energies have been kind of a mixed bag as of late. They've been kind of choppy and sideways, as it can often be. So, as a general statement, I probably leave energies alone. I know oil's beginning to wake up a little bit, and maybe something will happen there soon. But for now, I'm seeing some energy stocks roll over. I think it was like Weatherford International was one I saw recently as a potential short. So I would leave this one alone. Too thin, and we don't really have a trend that has developed just yet. Okay, Bonnie had asked about the moving averages with Lily, or did you get to see what you need there? Because I could certainly come back to that. In the meantime, we're getting a question on crypto, so let's take a look at that. Now, as I said earlier, here's that moving average again, okay? The Landry light, and we'll go back to another chart over here. So we'll take a look at Bitcoin, and then who wants to look at Ethereum? Tania wants to look at it in Ethereum. I hope I'm saying your name right. It's hard to read. The print's about that big. ETH, USD. Well, let's take a look at Bitcoin first. BTC, USD. And then let's just put something simple in here, like Landry light. So we'll do a little bit longer term Landry light. So 30 EMA with the Landry light, you can see we had a really, really nice trend here. And Bitcoin, it pulled back to the moving average. This would have been a buy back here. It didn't really materialize. You might have been able to get a little bit of profit out, maybe scratch out the remainder. And then we've gone sideways for a long time in Bitcoin. So we're kind of wide and loose and all over the place. We're kind of pulling back to that EMA. It looks, if anything, it looks toppy. I would avoid it for now, though. Now, if we can get back above 70K, maybe 75K while we're wishing or whatever, then I would look to play pullbacks here. So I would leave that alone for now. Now, I know you were asking about Ethereum. I just wanted to make sure I got Bitcoin out of the way. So we'll take a look at Ethereum. Ethereum is a lot uglier than Bitcoin. Now, Ethereum is an actual short in here, okay? Notice that you've got this big old topping pattern in here. I saw somebody on Twitter saying that they know someone that's really smart. They just put 80% of their money into Ethereum. And I'm thinking, as I said in the movie Taken, good luck. But you can see one thing I like to do is I'm known for drawing the big blue arrow on the charts. And right now, the big blue arrow is pointing lower. So this, you've got lots and lots of Landry lights. So far, you've got to pull back. If anything, Ethereum would be a short, okay? And again, you can see your Landry light illustrated down here. You've got 13 bars of downside Landry light, a little bit of a pullback. That looks like a short, okay? Could you make the stock picture bigger? Never mind. Okay. Glad I could help. Okay, any more? Let's see what else. Any more picks? Did we get to everybody so far? Okay. So let's see let's see what else is happening. By the way, when a market is really, really running, okay? Now, this doesn't happen often. It happened in 1999, occasionally here and there in stocks again, but when a market is really running, sometimes you could just buy the strongest stocks and play the relative strength game, okay? Now that rarely happens, but in the altcoins, I got to watch what I call them because I call them by what everybody else calls them. Starts with SH. Anyway, but in the altcoins, sometimes you could just come in here and buy the strongest pairs. And now is not one of those times because usually if you pay attention to Bitcoin, that's a pretty good bellwether. But these altcoins aren't doing so hot, as you can see. These are the strongest ones as of today. And most of these are headed lower. And again, that 30 EMA can really be your best friend. So for instance, take a look at this one. Okay, it was 44 cents back here. And it hasn't touched what kind of barely touched it here. This is kind of a thinner one, probably not the best example, but you can see, you get the idea. It's lost over half of its value, maybe 3/4 of its value, and never did close above that 30 EMA. So if you're newer to trading and this is all you walk away with, is that use something like a simple trend indicator like a 30 EMA while you're learning how to read charts, you'll do fine longer term. So I would avoid, again, Ethereum for now. And I'm not too excited about the altcoins at the moment. Now, I need to keep doing my homework because the crypto market especially changes really quickly. All right, Bonnie says, I played LLY to the downside when it crossed over. I have now lost my profits. Okay, so you shorted and then you've lost the profits on the position. I got you. Okay. But I have a gut feeling it will turn back down and continue to hold my shorts. Am I a fool? I'm still holding those shorts. Okay. Well, you're only a fool if you busted your original plan. Okay. And that's something I was working on a while back is when you break your rules, it's a fine line between feeling enough pain and letting it cripple you and letting you become the deer in the headlights. So we take a look at the lily. Like I said earlier, it was looks like it was headed lower for a while, but then what happened? It turned around, went straight back up. What I tell people when they're still stuck in a position, the best thing to do would be to get out, right? Okay, that's the best advice. The second best advice would be, okay, I know I'm already wrong. I'm already out a lot of money. So where are we now? Let's put a hard stop in. Okay. So like right now, above this high here, put a hard stop in and let the market make that decision for you. So when I go into a trade, I have an entry. I do not enter the trade unless that entry is hit. I'm shocked by the number of times the entry never gets hit and no capital gets put into harm's way. You guys, most of you guys here, I don't think know me, so I guess could retell the story. I tell the story 1,000 times, but a lot of times I'll get an email from somebody and they'll say, I'm losing my butt and that turd you recommended. And I'm like, the stock's going straight down. I would never recommend buying this stock. It's like, yes, you did. You said 6 months ago, and I'll go dig out the archives. I'm like, oh, yeah, I said to buy it, but only if it crossed above this level, only if it triggered an entry. And they bought it anyway, and they wrote it all the way down. So have a plan in place, and then that entry, sometimes I'll use a hard stop to enter. Actually have a hard stop in place so the market will make the decision for you. So the case like this, I would have an uncle point in mind, and it might hit that uncle point and you're out, but then move on. Okay. Learn from your mistake. Okay. If you didn't make any mistakes, you'd own the world in a month. And that goes back to some of the Livermore sayings. But if you didn't learn from your mistakes, you would never learn. You'd never have a blessed thing. So learn from your mistakes. I screwed up once. My wife says, you'll do that once. And that sticks in my head. So every time I screw up trading, I think to myself, I could hear in my head, it's like, you'll do that once. So put a plan in place to protect you from you. And in this case, again, a hard stop somewhere above the market, and then forget about it. You get stopped out, you get stopped out. If this market implodes, then you're still in, but then be prudent and trail that stop lower on the remainder. It's a tough lesson, believe me. I get my buttocks handed to me quite often. I make a lot of mistakes. I'm not going to come out here and pontificate like I never make mistakes and do stupid stuff, but learn from my mistakes, learn from your mistakes. So yeah, you'll do fine. And here's the thing, you're not being obstinate, and hopefully you're not like looking into that book saying, well, this drug could fail, or their earnings aren't so great, and let's see what the economy's doing, and is the Fed going to raise rates or lower rates? No, you look at the chart. If you're wrong, you're wrong. Remember, when you're trading, all you have to do, I know, easier said than done. All you have to do is capture a price movement. So you look at price, figure out where you think price is going, figure out where you can get in, where you can stop out if wrong, where you're going to take initial profits, and then how you're going to trail that stop. You figure out those things, like I heard Marcus at the tail end of his speech listed 4 or 5 things that you need. Figure out what those 4 or 5 things are, and then always have them in mind. Always have that plan in mind. And one thing that may kind of dovetail in a little bit, always remember when you're looking at the charts, you're trading traders, not markets. So everybody who's bought the stock prior to you, they might be looking to get out, and you have to have those people in mind. And in this case, the shorts might be getting squeezed, and you'll get squeezed out with them. And yeah, what if it's just a short covering rally? Well, it could go a long ways, and before you know it, let's say the thing squeezes up to brand new highs. A lot of people start feeling FOMO because they owned it a while back, or they don't want to miss the to move higher. So they begin piling in, and then those shorts look much, much worse. So always have a plan in place. So let me put the rules back up for the TFM system and keep the questions coming. Great questions today. Good bunch here. All right. So is everybody seeing the? So here's the rules of TFM system. Again, if the market is 10% or more away from its 50-week closing high, and you close below the 50-week simple moving average, that's the whole sell signal. That's the designer's intent, was to design something to get you out of the way should the market begin to implode. And right now, again, longer term, this chart's about a week old, but it still looks right around this level here. So it's still okay. The buy side signal is when you are within 10% of the 50-week closing high and you have 2 bars of upside Landry lights. So if we take a look at this chart here, 1, 2, that was your buy signal there. And then so far, knock on wood, it's been a pretty good signal. Now in the Qs, I actually bought 100 shares at 319.49. And it was just for S&Gs. I'm like, I'm going to buy 100 shares. Well, I didn't realize we'd run this far, okay? And it almost stopped out not too long ago. Now the stop has to close below the stop, not just touch the stop. Remember, this is a longer term trend following system. But one thing I learned is the drawdowns, which I already knew, but the drawdowns are abysmal with this longer term trend trading. And if I was trading like I normally would trade, I probably would have been stopped out a long time ago on this. But I'm just following this particular system as mechanically to show the good and the bad of the longer term trend following. And knock on wood, it's been pretty good for this trend. But that stupid little position, I just gave up $7,000 on 100 shares. How crazy is that? 70 something points. So that it can be brutal with this longer term trend following. And as a general statement, you do want to trade at a small size to where if you get stopped out, you drop an F bomb. I actually have an F bomb here. One of my clients sent me an F bomb. It weighs about half a pound, so I can't drop it too high. But again, have a plan in place, and that's that longer term system. And as I've been saying throughout this presentation, you want to pay attention to your transitional patterns right now because the market could be in the early phases of rolling over. And you can see that in this particular case, you can see you have an uptrend and then it begins to roll over and you're looking to short that first correction. And now we're kind of in that first correction, maybe second correction phase. So now we're looking more to short than go long, but we will listen to the database. If I find a long tonight doing my analysis and I'm really excited about it, even though the market's still questionable, I would buy it. Okay, especially if I had sector backing. Like right now, somebody earlier was asking about Lilly, which is a major drug. Well, major drugs just broke out the brand new highs. So maybe we'll find some setups there. But on the short side, semiconductors, technology in general, looking questionable at best. And then some of these recently strong areas like banks and financials could be the next play on the short side. Shorting is tough. The last 2 or 3 presentations I've done, which you can find on YouTube, I talked a lot about shorting, and it's not as easy as it looks, and these positions often go against you. So it's a tough way to make money. But the reason that I talk so much about shorting when the market gets iffy is that if you learn how to short, you're able to see both sides of the market. Whereas if you're long only oriented, as I often preach, you tend to always see the market as glass half full. And I have, as I've said 1,000 times, I have some friends that run hundreds of millions of dollars, and one friend used to run billions of dollars. But in general, those who are long only oriented by their charter, they tend to always be a little bit more glass half full than glass half empty when the market gets a little iffy. And 90% of the time or 80% of the time, they're probably okay because the market does generally go up longer term, as you know. But it's every now and then when the market does begin to roll over, you really need to pay attention to those transitional patterns. Now, keep in mind the bow ties and the first thrust and other transitional patterns that I trade. That's a little bit more advanced trading. Learn the generic trend following first, and then move into those potential transitional patterns. We have a few minutes left. If you guys have a few more stocks you want to take a look at, or just questions in general, I'll be happy to see what I can do. Let's take a look at the P's. S&P 500. So far we're pushing higher in here. IOVA. Okay. All right. So there's nothing here for me to get excited about. You can see this stock rolled over and has been headed lower, and now it's trying to head a little higher. But for now, there's really nothing to get excited about. This stock would actually have to make brand new highs and then pull back for me to get excited. Again, like I said earlier, if this stock was hitting, like, see back here, if it's hitting all-time lows, let's put the bow ties back in here. Then that would be a point where you might want to consider getting long. So you can see way back here. Let's see if we could find it. Way back here, it's making the turn with the bow ties. So that would have been a much better time to look to get in a stock like this than now. So I would leave that alone. Now, one thing that you want to do is match the pattern to the market and match the pattern to the sectors. Okay. So what or the semiconductors doing? Semiconductors are headed down, and so far they pull back. So maybe look to trade stocks that are doing the same thing. And that goes for the overall market too. You can see the S&P 500 mostly lower, headed lower, and so far just pulling back. And then the NASDAQ composite. Oops. I have a lot of different charting platforms. I have to remember all these symbols. Okay, Generac, we'll do that one next. Or BJB. So NASDAQ, kind of like the P's, you can see it's had a thrust lower and pulling back. So I would be looking for stocks that have recently had thrust lowers from all-time highs and then are now pulling back. We'll take a look at Generac. We have a few more minutes. If you want to keep them coming, I could try to squeeze a few more in. Okay, so Generac looks like it could be in a little bit of trouble. Long or short, I think this looks like a potential short in here. It just made these multi-year highs. Ideally, I want to see all-time highs. But you can see it's in the process of flipping over to the downside. So long or short, I think this would be a short. I think you might be able to find a little bit cleaner shorts out there, but this looks okay as a potential short. So if you're thinking about buying it, I would leave it alone unless it could make some marginal new highs or multi-year new highs, and then look to play some pullbacks along the way. So stay away from that one for now. Okay, any more? Mara. Okay, that's a fun one. So what was interesting about these crypto stocks is when Bitcoin was sort of tanking a little bit a while back, these crypto stocks were doing really well. But right now you can see Myra looks like it could be in trouble. Okay. I wouldn't rush out and short it, but I certainly wouldn't buy it. So as I said earlier, if you knew early trend to trend trading, have some kind of metric in mind. Well, the bow ties or turn to the downside. So I would leave it alone for now. And then, as I said earlier, if you don't know anything about the markets, plot your 30 EMA, okay, and see where you are there. And don't look to buy a market unless it's above the 30. So you can see lots and lots of Landry light there, 11 bars since it's touched the 30 EMA. If anything, this stock looks like it's in trouble and looks like it's headed lower, but it's a little wide and loose and a little sideways. So I would, as a general statement, I would avoid this particular stock. Okay, any more? I know we need a little transition time in here, so I could squeeze maybe one or two in real quickly. While we're in impasse, obviously I want to thank all you guys and girls for attending today. I appreciate you taking time out of your busy schedules to be here. If you need to reach me, as I said earlier, Dave at DaveLandry.com or DaveLandry.com/contact. If you go to DaveLandry.com/free-book, you can get all three of my books for free. Get to know me. I do have a trading service, as I was talking about, and I do have a members area. And the members area is in Facebook, but you do have to be a member of DaveLandry.com to participate. We have a really good group of really smart traders. We have a few experts in different areas there. So I'd love to have you in the group, but get to know me first, get the books, watch some of my YouTube videos, poke around my website. And then if you find it interesting, then obviously uh, become a member of DaveLandry.com and become a member of this trading service. Okay. Well, again, thank everybody for, GME. We'll squeeze this last one in GME. GME is going to be all over the place. It's a so-called meme stock. And what's his name? Roaring Kitty. Yeah. So if anything, it looks like it could be in trouble, but mostly sideways. I would leave that alone. It's just it doesn't trade clean enough, at least in more recent times, for me to get too excited about that. It's up, it's down, it's up, it's down. It's what I call a Jackie Mason stock. Again, thanks everybody, and of course, thanks to David Cosmitter for having me back once again. It's good to be back, and looking forward to doing more shows with you. Thank you so much.